Good morning. I'm Epstein with your morning flash update, and this update is for the morning of Thursday, and we're at the 27th of March, 2025, about 8:20 a.m. Central Daylight Time, or Central Standard Time is really the right word here. All right, so let's talk about first the news of the day, and then we'll come back to the markets, okay? Fourth quarter GDP came in a little better than expected, up 2.4% versus the 2.3. The chain weighted 2.3%, down a little bit versus the 2.4. The final PCE, and this is always an important number, 2.4% versus the prelim report of that number. You were down in the core PCE by a tenth. The Fed will like that versus the prelim of 2.7. Jobless claims came in 1,000 light at 224, and there was a revision, by the way, last week down. And the continuing claims fell 25,000, so that's all important. We're going to get the natural gas storage report at 9:30, but now let's talk about the elephant in the room, the tariffs. So imports of fully assembled autos on April 2nd go to 25%. However, there are caveats under the USMCA deal, Canada and Mexico, where certain cars that have certain components, no, they don't go to that 25%. But non-component made in non-USA, those parts will go up. It's crazy, but it's the way it works. But Porsche, Ferrari, Audi, companies, a lot of Japanese companies that don't do enough manufacturing here, Kia, things of that nature, problems for them. That's the way to look at it. Major auto parts initially, including engines, transmissions, powertrains, and electrical systems, they'll see on May 3rd, their numbers go up to 25%. Now, when we go to the marketplace today, and I think that's where you want to go, you would think this was a shakeup. It isn't. You're actually making new lows. When I woke up this morning, the markets were higher. And now they're down 14 points, 30 in the Dow, roughly 77 in the NASDAQ, and Russell down too. I think the NASDAQ is heavily weighted by the H2 problem that they're having in China, where now the Chinese government says they don't want any of their companies to buy NVIDIA. So that's going to drop the stock about 2%, and that's what's going on right here. In the metal markets, you went to a new high in gold. So the market, let's take it this way. The market is interpreting that these programs that the president puts in are inflationary. You also went up to a new high, which means when you lost the bearish embedded reading, it did not get hit. It's rare, but it's the way it is. But are we on day two? We're not, okay? We're further along. So my rule didn't fail. It just didn't hit the objective. In the silver market, up 30 cents. Look at the copper, down 10 cents. I mean, I've been warning traders that, there's a point where you just don't want to play. You're so far ahead. And this copper is rushing to the United States from abroad to beat the 25% tariffs and get it delivered on New York markets, which are totally out of kilter with the rest of the world prices. They're 17 to 20% over, not now, as these numbers start coming down. The dollar, instead of getting a bid on this, the market's looking at it different. It's saying, you're hurting yourself, and foreign currencies are basically rallying against it. So how do you put this all together? Well, it depends which analysts you look at this morning. I'm looking at Mike Wilson. I'm looking at a number of other analysts that have been on Bloomberg and CNBC. And some say it is a negotiating point. And while the president says it's permanent, their answer to that is just like everything else he says. It's permanent until it's not permanent, because the negotiations have gotten underway and he's content that the other party has done enough. That is why you're getting a muted reaction. In other words, the president's own way of doing things has gotten maybe the cushion in place of the market, where the market's saying, yes, Mr. President, but no. We know if they all come, you don't want to shut that all off. Number two on auto tariffs, you can't build the factories in under 3 years that you need. Number four, what are these major component parts, all right? I mean, he says engines. There are parts to engines in America that are made in Korea and other parts. You couldn't possibly build a factory to do them in the amount of time, let alone have the technology you need to do it. I'm not saying you can't get it, but you can't do it right away. So, is it a negotiation? Well, the market is saying it is. I would have thought you'd come in today and these markets would be double or triple this amount if it believed these tariffs were really the permanent word. I'll leave you to figure that one out. You're down a little bit in the energies. Bonds and notes, they were down a lot more than this. They've seen a bounce since we've gotten fourth quarter GDP and the unemployment numbers. A mixed bag. Notice the Mexican peso is down 40 points. The yen is down. So you can almost look at the markets and say which ones are getting hurt, which ones aren't by all these tariffs. In the grain markets, I still expect that you're just going to whipsaw, although right now, soybean oil taking off to the upside. So there's your stellar performer, and you're getting a little bit of a bid in the beans. Remember, we're going to get acreage and ending stock numbers very shortly. And when they come out, you're going to get a much better feel as to what to do with those markets. As we look over here in the soft markets, coffee finally coming down pretty hard, down 10 cents right now. That's a lot. You're stuck in cotton and sideways action. I'm Ira Epstein. There'll be an awful lot more to digest at the end of the day. I hope you tune in at that point. You have a great trading day.